Let's also hear the big face right now, Mark Mobius, and his outlook on the emerging markets as well as developed markets and where to put your money.
Of course, you have to be selective because there's some companies that are very, very expensive, some that are cheap. Generally speaking, what we're finding is that in the frontier markets, valuations are very, very attractive. They're single-digit PEs, price-to-book values are below 1, and so forth and so on. In emerging markets, generally, it's very patchy. Some markets are relatively expensive, some are not. It's interesting to note that in the BRIC area, BRIC countries have been pretty down, very unfavorable notices in terms of earnings and so forth in many cases. There we're finding some opportunities. We think there'll be a bounce back because there's been too much negativity, and that has pushed prices down to levels where there's a chance of an upsurge again. What we've seen is a flow of money going into emerging markets funds during the last 5-6 years in a pretty large amounts, with the exception of the subprime crisis. In the first half of this year, there's been a lot of money going into developed market funds, and emerging markets have been flat in terms of money flows. I think that'll be reversed because as profits are made in developed markets, as money flow begins to increase because the banks now are going to be flush with cash that they want to get out into the market, you'll see emerging markets come back. We're now overweight, of course, in frontier-oriented companies and countries. Of course, as a percent of the total, it's relatively low. China has been increasingly overweight as we go forward because there are lots of opportunities in China with the negative news that you get. There tends to be good pricing opportunities. Thailand is overweight. We're seeing some overweight positions in Latin America, for example, Colombia, Chile. I think that China is not going to slow down significantly. If you could look at the size of the economy now, second largest in the world, 7% growth is tremendous growth. You're looking at over $1 trillion of additional GDP in this country. So it's an incredible increase in nominal terms. Real terms, of course, you're going to have a slowdown because it's a big economy. You can't be growing at these double-digit levels that we saw in the past. Great for equity investors, obviously, because Abenomics means more money, more liquidity. Not only for Japan, the Japan market has gone up a lot, but it will continue to go up. But for emerging markets, it's very positive, particularly for Asian markets, ASEAN countries, Thailand, Philippines, Malaysia, Singapore, Indonesia. These countries will benefit.